Bitcoin's up 16% in the last 2 weeks, and the seasonal pattern for March across Bitcoin and the stock markets continues to play out. Now, what happens next, of course, is up to the probabilities, but I want to show you in today's video what generally happens next if we see these prices break. Hit the like button, subscribe to the channel. It's your home of macro cycle analysis. We're covering the stock markets, Bitcoin, and the real estate cycle today. As always, I'll be using the Gann Swing Pro along with the forecasting cycles that you can find a link to in the video description, 7-day free trial for the indicator suite. And of course, any of the signals and trading plans that I talk about will be here in TIA Premium. Also, 7-day free trial, plenty of courses to get through. Now, with that aside, let's start out where this seasonal pattern is going for March before we get into BTC. This is what we looked at just a couple of weeks ago, 11th of March, just before we got to the 13th of March low, basically where the sentiment freaked out and we had extreme fear. From that point, now we're seeing the market progress. This one has been updated on the 20th, but of course today is the 26th. So that takes us out to roughly the 18th trading day of the month. Typically, we see the prices continue higher, and this is for the Dow Jones, NASDAQ, Russell 2000, SP 500, Russell 1000. The dotted lines are the current year, and the solid lines are the last 21 years. So it's been a pretty similar pattern when you look at it in terms of the swing of the market. Percentages, different story, but in terms of the swing, down for the first half, up for the second half, and not much has really changed here for March. We've been down for the first half, up for so far the second half, and this is where we find ourselves now. So this has basically been the point that we've been watching now since the 13th, pretty close to on the 11th, but basically that 5,838 points yesterday, hitting dead on that mark, 5,837 and a quarter, and today 5,836 and a half. So this is the level to overcome. Now, what we're discussing in today's video is what happens next. Well, of course, I'm just leaning on the probabilities here, and they seem to be working out relatively well throughout this macro bull market, is we need to see the SP 500 continue up, obviously, but it needs to be in a clear trend. So that's something that I've been sharing with you guys with the SPX chart on a monthly here. And generally, when we get this particular pattern play out, it's a nice clean run for the bull markets. So we can line up the Bitcoin bull markets with the S&P 500. And when you see a clear trend here, looking at our yellow Gann Swing Pro, basically not much indecision, more certainty, and barely any swing breaks, if any at all, then you've got that big, strong Bitcoin bull market. 2017, clear example. 2021, another clear example. It was pretty much straight up from the end of 2020, and then taking it back to 2013, nice strong move to the upside. And that was your Bitcoin bull market. Then things got a little bit choppy for the S&P 500. Uncertainty enters the market. 2015, tough year. 2018, tough year. 2022, tough year. That was the time that things were looking quite uncertain. At the moment, things are a little uncertain for the S&P 500. We've had a breakdown of the monthly swing chart. We are in our second red month. However, it's the first down month, breaking that swing low. Ideally, we start to see closes at least above the July top here at about 5,670. And I mention that because there's only about 6 days to go until we get the monthly close. That's looking at this from a broader perspective. Let's drop it back down to a daily chart here, going back to the mini contract. Now, why do we use the mini contract? Well, this one here is the one that is traded. S&P 500 is basically just your cash contract, giving you a reading of the top 500 stocks, market capitalization weighted. So we're going to use the E-mini futures because this is where the actual trading takes place. That's the level there, 5,838, as we've covered. Now, in the past, let's use the August example, the most recent one here. When the S&P 500 has broken back past the 50% level, so let's draw that up right through there. Well, we've got a starting of a stronger market again. You can see how it came above, fell just short of the all-time high, but then tested that 50% level, putting a higher low, and then started to break higher. Of course, we can see from there, the rest is history, got new all-time highs, so on and so forth. So does this happen all the time? Well, in the next example, yes, it did. It fell, rejected at 50%, just like what we're currently at the moment. You can see these 2 days got tested, puts in a higher low, breaks past 50%, and then you start to see that clearer trend evolve for the SP 500. But I know what you're saying next. Well, this was through May, June, July, and August when Bitcoin was going down. And then what you can see from the S&P is that we saw a clear run up. Bitcoin also had a run up into a lower high, and they all came tumbling down on the same day in August. That called the final low. Huge emotion, huge volatility, huge volume, and then the bounce out of those lows. So I want to look at that particular signal next on the S&P 500 and on BTC, looking at some of those diagonals and how the market tends to behave after it breaks out. But before we get to that point, we need to have a look at a couple more examples here, because these are the times when it doesn't work out and what to look out for. Of course, no one knows for sure in the markets, and I know people hate hearing that, but that is the truth of it. And anyone that's trying to tell you otherwise, I mean, if you want to hear that, then you'll go and listen to that, won't you? But essentially, we just got to follow what the market is giving us, because at the end of the day, that's what we're trading. So we're following the 50% level up. This is where we got to with July into August, started to break past the 50%, failed, tested again, and then failed for a second time. So what we want to look at to identify, is this going to be a failure, like a false break, because the false break narrative continues to come up as well, is the weekly chart. So this is where we were just at, looking at it on the daily. Now on the weekly, you see one weekly close above, break under, and closing underneath. Then another test with a lower close. Then the next week follows, and that basically breaks down. So it was attempting to get above that level. Volume came in. The close was lower on that bar. You can see right here. Maybe you might like your candles. That is your close there, and it closed underneath these tops. So that led to, again, the failure of the move. It wasn't able to do it. Then we draw our 50% back to the next level. It's almost similar to the price coming up and testing a moving average. You know, you might have your moving average line running through here, test the top, and it fails at that point. So the 50%, I think, can get just that little bit closer to the market and gives you a good entry, exit points along with your swing indicator, of course. But moving on from that, there was a failure at 50%. The market went a little lower here, finally finding its, well, finally how many times? Finding its final low, and then we started to get the move out of the final low. So from that low, it tested the 50% again, weekly close above, weekly close above, weekly close above. And that gave us the 3 weeks above that level, 3 strong weeks, 3 weeks out of a significant low. And that was basically the strength that the market needed to push to a new all-time high. And of course, run away in 2024, leaving the majority of the market behind, thinking there was going to be another recession and so forth. So what I take from these 3 moves here are, if we're unable to, or if the market is unable to get above the 50% level, so we know it's at 5,800 points, and close above it, then we could be in for something like a longer correction here. Does not mean the lows have to go that much lower. They could test a little lower. They could basically base out at that point. But if we do fail, then we might be in for a couple of swings down. And if you recall at that time when we were making videos on the channel back in 2023, often if you do get the failure, there's typically 3 moves down. You can see it there. Nice strong move here. 1, 2, 3 into those final lows. So if it's going to be a stronger correction, you generally look out for 3 swings to the downside. Otherwise, you've got a pretty strong market. You get 1 swing and then a rally back up that basically doesn't fail. You got 1 swing down, a rally up, minor fail, but essentially you didn't get a lower low, and it takes off. So this was still above those 50% levels. That's the key level that we're watching now to see whether we get this prolonged, drawn out correction, or do we get a shorter correction. Doesn't mean that it can't bumble around, but basically we wouldn't necessarily see a lower low at this point. You can clearly see the difference between this one and these two significant corrections that we've had on the way up through 2023 and 2024. So hopefully I've given you some clear rules, guidelines, indicators to go away with should we see that. And of course, I'll continue to cover it on the channel, which is why I always suggest to subscribe here. And if you want to do it more for yourself with your portfolios, the markets that you're watching, you've got TIA Premium there, link in the video description. Okay, that leads us on to Bitcoin. I'll come back to the real estate cycle at the end of this. But BTC, where does that leave BTC? Well, at the moment, it's closing above the short-term 50% level. And yesterday was a reasonably good bar. So I'll look at the short term, then we'll get to the long term. Yesterday was okay because we had a slightly lower close, no big deal. The volume was also slightly lower, so not as many buyers and sellers active. The closing price was pretty much near the middle, so there was still some interest there, and it didn't break down past the 50%. This is the short-term 50% that we're watching here, $85,800. So we're holding above that now for 3 days. Let's move this a little higher, and we're looking at $88,000 now. So it's basically like a video game. It's covered the $86,000 level in the short term. Obviously, we need to get to the weekly close as well. But while we wait for the weekly close, we're watching the next levels to see if we get that continued sign of strength through these next couple of days. That level is 88,000. Now, once we break that level, we can get rid of this and we move up to 92,900. So call it $93,000. And if you're watching yesterday, we are looking at the overbalance in time and price. And I got a couple of your messages saying that you understand that a lot better now. And that is like an early warning, a leading indicator for a change in trend, which can help you out a lot, put you in front of the majority of the market. Because once you see that signal, it has a very high success rate. So we get this overbalance in price, beating any of the previous moves down. It's longer than any of the moves down. And then it takes the guts. It takes like the time in the market to believe it because you've seen it happen so many times before. Of course, always have your back up there with your your stop losses. If you get that, well, you typically will see this decline after you get the overbalance, as we've seen before. Then this is a pretty decent, and I say pretty decent in a relatively strong way, good buying opportunity because you're seeing well, you're getting in a lot cheaper, but you've got some pretty strong signs that the trend is beginning to change. The last time we saw this back in September and October, you guys that have been following a while probably getting sick of it, but the new viewers probably haven't heard it before. So bear with us. There's September, there's October lows. We got the overbalance in time and price right here. And then we had a nice breakout. So what I'm looking for next, if this continues to push through, we get the strength here, we've got the diagonal coming up. So this is something that we haven't gone through in greater detail because we just have not been close enough to the diagonal downtrend now. So we're looking at the diagonal downtrend, and like we could see from the previous times, I like to see some volume pick up on the breakout. So anytime we get a breakout, we want to see the volume pick up and then the momentum follow through. That essentially means that you've still got buyers in the market who are expecting higher and higher prices. Otherwise, we end up with, say, what happened around the Trump inauguration right there. No one believed it except for people on X. Then you had this bar right here. This one here was on the 3rd of February when Trump posted about the crypto or Bitcoin strategic reserve. No one believed it. Well, they believed it for a few hours and then the market sold off heavily. That is a pure fact now. They might believe it in the future, but in the moment, that was a definite sell the news. You had the buy the rumor, sell the news. There was basically the rumor for a few hours, and then the news comes out around the time, okay, yeah, call it. Maybe you're right. Maybe it was a buy the news for a few hours and then basically sell the shit out of it. And that's what the market did. So they didn't see any sort of strength in that news at the time, and that's why you had this big dump. I digress. The point about those is that the market didn't follow through. So it's a sign within itself. But when we take it back to these areas, there really wasn't any talk about Trump here because the election was coming up, or Trump and his strategic reserve. There was what was the talk in mid-September? What was the talk when it started to break out on this particular day here on the 14th of October? That when you look back now, was any news that came out on the 14th of October, was any of that stronger than Trump's inauguration, Trump's strategic reserve, Bitcoin reserve, Michael Saylor talking about Bitcoin and all the other crap that he always talks about. How is that day any stronger than that? But that was basically the key day through this whole move. Now, there are a couple of other key dates, but this one here in particular broke the swing tops. It broke this key swing top as well, and then continued to close higher on increased volume. So there is the volume. It was increased. It was above anything prior to that, going all the way back to this key breakout area of the first diagonal breakout. So we might have to go through multiple diagonal breakouts. We clear this up a little bit so you can see. The first being in September, the second being in October. Here is the first increased volume. Here is the second increased volume as well. So that's what we're looking out for next. We've got 1 day here of increased volume from the past 4, 5, 6, 7, 8, 9, 10, 11, basically nearly 2 weeks. So it's been a reasonable day there. Nothing out of the ordinary just yet. But if we continue to see this, some green days as they break past the 50% levels, the diagonal downtrend in particular here, then that could be a good start to get to the overbalance in time and price. As I clear this up for you so you can see, here's the overbalance in time and price. That was roughly your $17,000, taking us to about 93.5. Ideally, this swing top at $95,000. So they're going to be some key levels there for the market in the short term. Now, to me, all of this is going on while the fear and greed index remains in fear. It touches on neutral every now and then, but the building, the resetting, the healing, whatever you want to call it, is happening while the masses are still scared. It's in fear. Like, that's just what the reading is. We can't deny that. That's the fact of the chart here. Now, obviously, a few weeks ago, it was in extreme fear, and we've been beginning to get this climb out of it. That doesn't mean that we can't retest fear. Again, testing the using 2024 as an example. You had the August low, it climbed out of it, got to neutral, I think maybe even a day in greed, there's 56, and then dumped back into extreme fear. That's your higher low again. Another higher low, this time, however, just dropped into fear, and then it basically ran away into that first top of December. Okay, so can this happen again? Obviously, well, the answer is yes. We've got to move to neutral. We've got to watch out for any sort of rejections coming up, I think, in the next few days to a week or two. Ideally, we get the closes above, and then it can come back and retest those lows. In yesterday's video, we looked at the time frames to the downside being roughly 10 to 14 days. So look at it like 2 weeks, and we'll see wherever this top comes in, then we can measure out the 10 to 14 days to give us that next timing for the low. So that's the next thing I want to talk about. Now, onto the time frame. And this one here is just a little bit more hopium for you. So if you enjoy your hopium, hit the like button. Let me know in the comment section. I know there's a lot of bots. We've done our best to get rid of them. But the fact of the matter is the letters can keep changing and the bots are just going to be here forever. Screw the bots. Anyway, I digress. Now, the big hopium here is looking at the breakout point to the boom point. I've just labeled those things myself. Well, the breakout point here above the diagonal downtrend, and then the boom time. So there's a big bar that breaks all of the previous highs. Volume comes kicking on, and then basically everyone's a believer from that point. From that breakout of the diagonal, and we're looking at the major diagonal here, the diagonal could adjust, okay? Let's get this here so we can see it, because right now we just have a shorter term diagonal. Let me just put this in so you know. Okay, so what if we get to this high here at $95,000? That would be our next diagonal. We could watch this happen, come back down, and as we start to break out again, that's where we would look for that next big breakout. Now that we understand that, how is this game going to play from that point? The breakout into the boom time. I've got a date here, or a time frame of roughly 23 days. Has it happened before in this bull market? Well, the answer is going to be roughly yes. And I say roughly because the last time it happened was, you could argue, 18 days. There was a big boom day there. High volume, broke out of the previous tops. However, it did not break the consolidation level. But in the October-November example, it did break through the consolidation of $73,000, $74,000, and that day got to like $76,000. Okay, so that's the 18 days. What if we timed it out to get to a breakout of those previous tops at 31, 32,000? Well, that takes us out to 25 days. And the other bar here that I was looking at, a nice strong volume, that was about 22. So let's say 25. We've got a 25 and a 23, only two options there. Call it 24 days. So then we've got another time frame to measure from until we get that big breakout. Now this could come April or May, after we get tests, pullbacks, wait again, then you'd measure out your 20 odd days. That almost lines up with the timeframes that we're watching for the market sentiment. Here is the fear and greed index. We've been watching a peak of the fear and greed to a low point, and that time frame came out at 97, so just over 3 months. And we currently sit at around 124 days, still have not broken to the fresh highs. So I'm still watching for the total time frame here being nearly 5 months. You can see it did test these lows, or came to the low, made a low, ran all the way back up, and then made another low at the 5-month period. The price cycle, something similar, got into fear, ran up, tested another low. Prior cycles have been doubles because that was a bear market, of course, wasn't in a bull market. Now, of course, I'm still saying this is a bull market because we haven't broken down from the major 50% or the previous tops at around the low to mid 70s. Anyway, back to the sentiment, 154 days, 143 days, 175 days, so slightly longer here, but you get the gist. Around that 4 to 5 month period, we're in the 4 months, 5 months takes us out to roughly end of April. And if all of this stuff continues to time out, well, it looks like we're in for some sort of significant move towards the end of Q2. Does that line up with the overall cycle? I think so. And if that's the case, there's really not much time left after that. But I'll leave that for a future video, how much time may be left on the cycle if, and it's a difficult one, if all of these things play out. Now, I mentioned at the beginning of the video, I'll talk about the 18-year cycle at the end. And this goes hand in hand with why I think, and you're welcome to your own opinion, of course, why I think there's still some time left to go in this cycle. So the 18-year US real estate and economic cycle, which essentially drags the entire world up with it. And of course, there are going to be some nuances. But the thing I'm looking at here is the constant fear, negative news, talks of crash, recessions, calls it cities are coming collapsing down. Yet we keep seeing the national average real estate prices increasing across the US. That is one of the major things I'm seeing here. There is still not the understanding that markets can keep going up longer than we can remain solvent. And I think, well, it does apply to all the markets. That's the stock markets, Bitcoin, that is cryptocurrencies. And that just doesn't mean that it has to happen all at the same time. Like we're seeing a pause here for BTC, call it a correction from 109 to 76, but essentially it's at 88 now, right? The stock market's down 10%, now back up a few percent. It doesn't mean it has to happen day in, day out of a straight up line. It just needs to, we just need to look at it in overall perspective over many, many years. And at the moment, we're still seeing reasons why people think that this time is different and that the cycle is now over. They keep calling the tops every single time there was a couple of percent decline from these peaks. And now more than ever, because there was a 10% decline on the stock market from the peak, they're getting a little bit more confident again that the prices are going to keep collapsing from this point. I have a different view. That's obviously the 18-year cycle. That's my 2 cents on this for the end of this video. If you like more of that, let me know in the comment section. Like, subscribe, Indicator Suite is there for your benefits. GainSwing Pro, Forward Returns Dashboard, and Predictive Cycle. This is the stuff that I'm using for my retirement fund and for my active daily trading, and also our members as well. So nice, simple, time-saving tools here. All right, guys, I'll see you back here at the next video. Till then, take care and peace out.